Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. There's the dollar index. Lately, we've been doing that for like the last 7, 8 months. It seems like we've been starting with the dollar index because pretty much everybody's trying to tell us that the dollar is in bad shape. Doc covers all of the markets. I like that, Robin. That sounds very good. You're like my Mr. Snerdley to Rush Limbaugh's show. It's cool. You throw out poignant, important things. I like that. That's so cool. Yes, we look at the dollar index. We usually start off with that, but if anybody wanted to see anything else, we'd have no problems. We'd gladly go to look at it. The numbers reflect the hope and future of the country. In other words, Mr. Trump came in very strong, and so because of that, the markets. Robin was saying to me towards the close yesterday. He said, "Oh, look at that! It's getting ready to break out on the hourly." And sure enough, it did. It jumped from the 95, 96 area up to the 20 area, maybe. I think that's what it was. Let's take a look at it. Let's go to my short-term chart. We'll identify it real quick. Yeah, the S&Ps are now at the high of 4,918. They're backing off a little bit, trading over here at 15, as you can see on the intraday chart. Oh, you can't see the intraday chart. Let's get that intraday chart up there. There it is right there. There's the 18. And you can see it's just selling off a little bit, nothing major, a little profit taking. That's how you make money in a market. You buy something or you trade something, be it a short or a long, and you take a profit. The next thing you know, you keep on taking profits. You are making money. That's the whole name of the game. All right, so there's the dollar index trying to trade up. They're pushing it down this morning. It was at like 103 and a half. You can see it's trading at 102 evens with a 195 bid. Let's put it up over here. You can see it on J4X now as we speak. You see it right there. Let's just make it bigger so you can see it. You see it's right underneath the 103. It started up. You can see it got as high as yesterday was 103.60, almost 61. So it's down, what do we got there? It's closed at 96 right now. So you're talking about 64 points down. That's a pretty good drop for this product. And you can see it's still in the weekly buy for a few weeks and a daily buy for pretty much off most of the time. You can see there's a sell there or two right there. Oh, let's fix that so you can see it all. Let's see it all like that. We didn't do that right, did we? No, not again. What's the issue here? Let's go like this. There it is. There's the X. And so you can see it here, when it corrected in here a little bit. Oh, that little correction in there, you can see that the same. Now that was interesting. Let's see if we can move that again. I like that. How about that? I guess we could do the same. Can we do that? No, it doesn't want to do that. Okay. Too bad. I like that. Whoa, where'd it go? Where'd it go? There. Oh. Now where did I put it? Where did it go? And let's go like that and get it back. There we are. And so you can see here, to a great extent, it's been in a buy since the beginning of December. Or I'm sorry, the end of December. At the beginning of January, all this movement here has been, it's been climbing up. It's been in a weekly buy for 3 full weeks. Next week will be 4 weeks. It just has been climbing and climbing. And we keep on trying to tell everybody that it's just normal. The dollar is overpriced. That's it. Nothing more. It's not weak. Matter of fact, I'm going to show you a chart. I had a trader yesterday. Sent me over some Bloomberg thing, and I was like, "Why? I keep on telling you, Bloomberg is bad and evil. Don't pay attention to it. It's all spin." And so you can see here. Let's go over and show you. Check this out. This is the dollar ETF. Okay. He trades the dollar ETF. He says, why does it keep on going up? It's like, well, because there's more buyers and sellers. Why do you mean, why does it keep on going up? And so there we go right there. You can see this is the dollar index. The dollar ETF, I'm sorry, the dollar ETF. I think it has the same components as the futures contract, but it only trades, basically in exchange hours. And so with it, you can see it went into the buy back here at the end of October, beginning of November, and went into a weekly buy there. See where I'm emphasizing that, and stayed in the weekly buy all the way across. At the same time, the product was trading at. I even put a little box in these places to explain it to them. And then there is the 32 and change. See that close that day was 30. The low was 32.13, but that day it closed at 33.82. Okay, so they put in this low here, and you can see, there was a buy there for a while. It went up, and went into a sell here. And you can see the weakness there, and then you can see it went back into the buy right here, and climbed up. Went into a sell there for a little bit, and then back into the buy right here, and then a sell again, and there's your buy again. All along the way, it was all in that weekly buy, and then so it's been in a buy there since the first week of what do you call it, December. Is that December? No, January. I'm sorry, it's January now. Okay, so there's so it was in a weekly buy. It went into the sell for one whole day right there, and then right back into the buy again. We should steal one of these like that. Put that in there, and then grab this buy, move it right into there. And so you can see here, when looking at the USD ETF, you can see here it's it doesn't care. It just keeps on climbing. Even when the fast here weakened a little bit, it bounced off that and started to turn back up again. Look how high this was over the manifold. Pretty hard to take it too serious, the weaknesses, when you see stuff like that. Same thing here. They knock it down, and by the next week, it's right back in there again, and this thing not even removing itself from the manifold. I mean, it's not even underneath it, like thinking about going towards the sell. And so there's the dollar index. This is the dollar ETF. And you can see that strength, and it's almost doubled. Matter of fact, it has doubled since it went into the weekly buy. It actually doubled in price. Now, does it have higher numbers? I'm sure it does, because obviously, let's see if we can take a look further back. And look at the lows. I mean, it dropped into the 20s underneath it at one point. That's back in, when was that? That was back in 22, back in October of 22. And then if we go over to the dollar index, let's see what the dollar index on J4X looks like back in October of 2022. We're going to make it the whole screen there, just to emphasize the point that we're trying to make and the proof. It's not the point as much as the proof. We like to always emphasize the proof. That's the most important thing of all. Let's put the weekly in there. There it is right there. And there is October of 20. This is, what is that? That's October of 21. And then October of 22, is it? I guess this is right here. So this is the dollar index when it was down. I guess they slammed it. That's when they slammed the dollar down. As Mr. Biden, I guess he got elected here. This is where he got elected in November. And they slammed, the product was trading around, I guess, the par area? And they drove it down to 89 with Mr. Biden after he was elected. And then he ran up to 114. I guess that's during the top of the pandemic, maybe? I don't know. What is that, 22? I guess, I know what it was, the inflation. We hit the highest point of inflation right there. So the currency had to go up because of the inflation. Matter of fact, we kept on saying that. Back then, we were talking about how we are exporting our inflation. Yeah, so that's what that is. So that is the whole move right there. And let's go back to that dollar index. When is that? That's October of 21. And the low was right in here. What was that? Does that make sense? Then in the 30s. Huh. Interesting. So how did they get down into the 20s? They got into the 20s, and that was in May of 22. May of 22. Let's see what May of 22 looks like. And there's the May of 20. What's that date there? That would be. That's like the inflation. I guess they were selling the dollar on the ETF itself because of the inflation, the explosion of the dollar roaring to the top. Strange product. Very strange product. It doesn't seem to follow the currencies as much as we thought it did. Look at that. That's July of 22. And July of 22 is right there. No, it's October. Okay, it's a weekly, right. Yeah, so July of 22. July of 22. It says August, but doesn't say the year. I guess there's the year of, there is January, February, March. There's the June of 22. And they make this incredibly low point in this product. Very odd. I keep on telling them not to pay attention to these things. I'm glad I do now. And then you can see here, this is October of, what's that? That's October of 22. And what's that? That is October of 22. So when it reached an all-time high in the futures, and we had, the pairs trades all, following in lockstep, that was like a reverse. I don't understand how they could get it down to 20, or what was that, down to 14 or 12? What fools were selling this thing? It was down to 1165. And from that 1165, all it's done is climbed, I guess. Yep, made higher lows. There is, what's that? That's April, or right there, what is that? That's March of 23. And then there's, I guess maybe they readjusted this index. I don't know how. It's an ETF, so that doesn't make any sense. And then it climbed up into the 40s in July of 23. And July of 23 at this point is, let's see, July of 23 would be about right there, wouldn't it? That's July of 23. So it went back down into the lows, but not that much of a lows. It went down to par. 100, 99, that type of thing. And then you can see it has joined in and found a bottom, and they are buying this thing. I'm going to have to look up the USD. It's a U.S. dollar index, and I saw it years ago. And what it did is it had the same 6 currencies as the dollar index. So in other words, it had the euro as number one with the same percentage: euro, yen, cable, Canadian, Swiss. Speaking of Swiss, we have a story for us here today on Swiss, and kroner. The 6 major currencies. So that's interesting. I mean, compared to the futures and the other pairs trades, this makes a lot more sense, doesn't it? It's very unique. All right, so what we have is we read a great article. We're going to put it up on the screen. Let's go find that article about the Swiss bank, basically trying to remove the inflation that's starting to kick into the country and shake things up. Let's see. We'll find that article in a second. Put it up on the screen. Let's see. Is that it? The globalist new weapon? No. We'll find it. Is that it right there? China's economy, wide prices. Oh, yeah. We can go into that on the next thought of currency. How the government constructs positive economic data. Yeah, I should send that one over to Janos. Janos would love that. Let's see. Something's being fact-checked. Let's see. We'll find it. Is that it right there? Percent of GDP. Let's see. tax deficit. Let's see. I should have saved it already, but I was doing other things. Monetary. I think this is it. If gold's value comes in, non-compensatory inflation. I'll keep on looking at a few more. There it is. New York Stock Exchange. No. All right, we will find this. But what happened was I read a great article yesterday on that the Swiss central bank is is adjusting things. That's why we're seeing that. I guess you could call it that change in the Swiss against the dollar, whereas the Swiss and the dollar are doing a fantastic job, but they're basically saying that the inflation from it, they have to step up, and so they are now selling Swiss francs against the dollar, the central bank, to try to adjust it because of the inflation. And that was what the article was about. We'll find it. If we don't find it what's that? That's daily. Oh, that's neat. What is that? Okay, yeah, there we go. And we go like that. There it is. And so let's start looking at the currency pairs themselves, since no one's really asking anything. But yes, remember I was saying it was the best currency pair. I guess that's off the table now. It was one of the best currency pairs for months upon months, but now the Swiss bank is actually selling Swiss currency, or let's say that it's buying its. Would it be buying its currency? It's trying to reduce the cost, so they must be selling Swiss. That's what it is. They're selling currency, and so this way, no, they must be buying it. Yes, I'm sorry. Let's go right back to what my trading logic said. They're selling it. The National Bank of Switzerland itself, the government one, the federal bank, is selling it so that they can bring down the prices, because they said inflation is starting to really creep into their society, and they don't want that inflation to be there. We're talking about a population under 9 million, and one of the wealthiest countries in the world. So, it's kind of it's not that complicated. It's not like they have 150 million or 200 million, and it's a larger economy in that sense. So it's just a very popular currency. That's all. Because of the banking system there. Anyway, that is my look at the dollar index. How it went into the weekly buy and it just didn't let go. It doesn't seem to follow the index. We're gonna have to do more investigations on it. But I have friends that actually trade this stuff because they're equity guys, so they don't trade the futures contracts or the currencies. All right. From there, let's see, where do we go from there? We go over to the what do we want to do? We want to go to let's put the euro in there. We'll start off with the euro. You see the euro slid into a sell yesterday and is trying to climb right back into the buy today. You see we're still underneath that weekly. That's the only disturbing point out of it all. And here we are on Wednesday. And there is the euro-dollar pairs trade. It's still red. It's trying to turn up. You can see the fast has already done it. It's at 48.8. And the slow is at 39.5. So it's definitely finding some strength. Just waiting for the hinky ashkies to shift gears into the green. The green, green, green. All right, now from there... what do we go after from there? We go over to we go over to the cable. And let's see what the cable is up to this morning. And there is the cable. You can see it's still in that daily buy with no problem. I think it slid into the over here. I think it did slide into the daily sell, and it must be climbing right back up into it. Yeah, so it did the same thing. It climbed into the daily sell yesterday with that push down. And that's that move on the dollar futures contract at 103.60. And then now today they're joined right back in again. This is not losing the weekly. Notice that it's been staying in the weekly buy. It's not giving up. Matter of fact, I even saw the great experiment. It stayed. It went into a daily sell. It actually went into the daily sell too. We got it up on. Oh, there it is. We got it up on the J4X. And you see the fast is at 70.70. 70.7, that is. And the slow is at 68.8. So it's trying to join in also. Doing its best to get going again. Now, what was interesting, I'm going to deviate just a little bit. We're going to go over to the interest rates just for a second. I want to see the. I saw it this morning. It was in the sell still, and this is the 30-year bond. Interest rates were rising again here in the States. And let's see, did they follow through? They dropped yesterday. They're there. Let's put 20. I see, that's what it is. So it's still, interest rates are actually rising here. They're starting to really reflect the idea. Okay, now today they're trying to pick them back up again. But you can see this downwardly slope. This is the 30-year bond, and that reflects the same as when we go and look at the dollar index. The dollar index is the opposite direction of that because interest rates were rising. See? And you can see the dollar is being bought. Now, we're having a good little push here today. That's a pretty good push down. Easily sliding into the old sell there. I thought that was red. There it is right there. And with this way it's going, unless there's some real news out there, this product is going to stay, into the sell, and probably, I could probably put it down below here, like that. Red. Bing, bing, bing. There we go. That's the dollar index. It's been acting very well because, again, interest rates are rising here in the States, and the market keeps on trying to tell everybody that interest rates are going to drop. They think there's going to be a cut in February. No, not February, March. Not going to happen. Not going to happen. All right, now let's go over to I guess you could say the star of the day, and that is the Swiss, in the sense that we found out that that's why we saw all this strength. Now you can see it's gaining like the rest of the currencies against the dollar today. But this move was, much more stronger than we were expecting. It came from the 83.50 area, 33 area, something like that. And it's fighting to get into that weekly buy as we speak. But here we are rolling over a little bit. It'll be interesting to see how it goes out. I could see it coming back down into this area here, the 84s. But they think that the 83s were way too hot. The actual Swiss authorities think that was way too hot, and they needed to step in. Nice hot tea. All right, so from there, we go to the yen. Boy, talk about an issue that's been confused and not sure where they're going. Saw some interviews going on off of Nikkei News, and we always dedicate a screen to that every day. One of the screens always has it on, and they were talking about them resolving the issues with the LDP. I guess the LDP has become like a conglomerate. It's like an organization more than it is a political party. And so I guess there's coalitions inside of it. And, there's serious talk of trying to reform a lot of the politics in Japan because a lot of odd things have happened, and we all can see the evidence of it. A new Bank of Japan head last year at this time, and a new finance minister 3 months ago, and 5 ministers resigned 2 to 3 months ago, and back in November, and a punishment to the LDP party itself. They fined them, and they're trying to change laws that will stop them from getting cash from not contributors. What are they? Lobbyists, that type of thing. And so the currency has been really reflecting it, and you can see, we ran from, the 10s and the 105 and 106 and the 99s and the 90s and all that for a bunch of years, and all of a sudden we find ourselves at 152 at like a 40-year high. And from it, though, it's been interesting is that the stock market has been gaining against it. Let's show you the stock market there. Stock market went down to 8,000 from an all-time high 40 years ago of, what was it? Not 40, I guess it's like 35 years ago, back in the late 80s. the Nikkei was at 39,000. And let's find it on here. There it is. And we're going to throw that up on our beta. And you can see here it's gotten as high as almost 37,000, like 36,800. And you can see, lots of daily buying, and you can see, lots of weekly buying for 5 weeks full. And, it's been climbing and climbing. It keeps on finding ways to get higher as the inflation, I guess you could say. It's basically like an inflation trade. And many currency traders I've heard refer to the swap trade as a $20 trillion loan, or a 20 trillion, not billion, not million, 20 trillion swap trade. With the way they've been lending money and the way they've been borrowing money, there's a lot of just problems there. Their economy has not grown for decades now. Decades. They've been, they call it stagflation. They've been in stagflation now for like 3 decades. So, when we look at the yen, it's trying to tell us the story of what's going on with the country itself. And that's exactly what we're seeing at this point in time. All right. And from there, we jump over to the Great Experiment real quick. Let's see, right there. You see it trading at 32.94. It's lifting back up a little bit. Yesterday did they make it into that sell? Yep. So they made it into that sell. Let's put it up on put a line in there for it. And it looks like it's still trying to stay there. But what's interesting is we've had that nice high there today. Second highest tick ever. And we're not far from closing. The all-time high close is about 2 weeks ago, almost 2.5 weeks ago, at 33.0427. The all-time, the second highest high ever now is 33.38. So they were through it at one point, and right now it's trading at 32.93. So we're only 10 ticks off of, or 10 points off of. I guess that's like a handle almost, isn't it? 10 handles away. This thing ticks and handles all the time, I guess. I don't even know what you would call 32 now. But in the end result is it's 32.93. And so we're looking at, 10 more ticks up, or I don't know, 100, what's that, 100 more ticks up, and you are going to find it sitting there. And this product is, I don't even know how to describe it anymore. All we can do is describe what we see, because the level of action in it is so dramatic now, just so dramatic. All right, and then from there, we go over. I guess we can go right into the number one brick. And traders, if you would like to see something, let us know. There it is, the number one brick. Second day down. What's curious is it didn't make it into the sell yesterday, but today it is. So that would be putting pressure on gold and silver and everything else on the upside. There it is right there. Move that down. And as you can see, that is pretty good. What else can we say about that? We're in a weekly buy, so we're not exactly excited. The metals complex normally has strength now, just like it does in November, but awful hard to, really say anything more than what the math says. The best thing we can do is look at the math and not worry about what we think. So let's put USD ZAR up there. There it is. You see it's turning red there. It's showing the pressure. The fast is at 48.7 and the slow is at 55.4. So it's putting that pressure on it fast and quick, just like us. Now let's go over and look at the metals complex. See how that looks. So the first one we go to is right there, and that is gold. You see gold is lifting up. It's trying to get into a buy. It is, where's the weekly? Still went into a weekly sell last week and doesn't really seem to have any real conviction. It's been in a daily sell forever and ever and ever. Look at that. And then, since last year. And from there we go over to, let's save that too at the same time, like so. And we'll go over and take a look at silver. Silver seems to be, in some ways, technically, it seems to tell us the directions better. But gold is so much stronger, really strong. Okay, there we are. We are flirting with the daily buy as we speak. You can see right there, it's been in a daily sell since, where's that at? The 9th of January. And you can see really it went into the sell back in right after Christmas in December 26th. And then stayed in the sell all the way up until January 8th. Went into a buy one day and is back into the sell again. So this is not exactly a home run on it, in the sense of, that long a sell like the gold. But, the metals complex has no real clear direction. We always tell you about the different strange cross currents that goes on. And the only thing we can trust is really the algorithms. The algorithms give us a good, safe direction. After that, and it's hard to take serious anything. From there, we go over to copper. Let's put that in. And there's copper. You can see China's doing a major stimulation today, a 7.7. Oh, no, wait a minute. Let me say this exactly right. They're cutting bank reserves by 50%. So, in other words, a bank can have 50% less money in it to be a bank now. At the same time, they're talking about pumping in 1 trillion yuan, which is 7.7 to the dollar. Okay? So that comes out to be close to $120 billion to prop up the stock market. Because the stock market now is at some insanely low point. Let me see if we can put it up on the screen here again. You can see there the last 2 days, it's at one of the lowest points. This is Shenzhen. The Shanghai seems to be a little bit more representative of what's going on, but they're identical in action. I think it's under 3,000 now. Let's see if we can find it and put it up on the screen. Also, at the same time, let's take a look at the Hong Kong dollar. I know we have it. We look at it. There it is. So there's the Hong Kong dollar, and it got buried down into the 95. Let's see if we can get that up on J4X. That would be very interesting. You're probably going to be seeing some really low numbers. Let's see. There's Deutsch. There's a Chinese one. Let's see what that does. As it loads in. There it is. Now let's take a look at that. Let's put it up as a weekly. This could be something insane like 25-year lows or 15-year lows or something like that. There's a weekly. We'll sip our tea while we're waiting. Okay, so that is back to 22. Let's go and go and go and go. Seems like it's challenged that. What's that? That is back in 18 or 19. That's in 2019. That's as far back as it goes. Huh. So we're basically down at the 2019 lows. And I heard someone on the business channels say that it was at a 15-year low. So they're really feeling the pain there. And so the stock market, to the point where they have stopped allowing people to short. They did that about a couple of days ago, and that slammed the market even more. So that's what, let's put this in there like this. Go back to the daily. And put this on the screen. Oh, what's up with this thing? There we go. And right here, this is what happened when they announced. I think I said something about it, but I wasn't. I was more involved in something else at that time. But you can see here, this is where they announced that they're cutting, that shorts can't short anymore, and the stock market collapses. I mean, when in a minute, I laugh because government people, when they pull that stuff, get the opposite effect of what they want. That's the always amazing part. Just when they think that it's safe to do something, it screws it all up. And so that's where we're at the moment. And I can't tell you how many times I've seen over the last 40 some odd years, when the government says it's going to do something to stop what they think is bad, which is normally just free markets are better than anything else, it usually screws it up. All right, so from there, we jump over to, where do we jump over to? We jump over to copper again, looking at China. That's why we were looking at that, because China is in definitely having its issues. You can see here, copper is now making a nice run today. You can see that it's lifting up because of that stimulus. How far it will go, we'll see, but we know one thing for sure is by following our algorithms, which are much better than anything else, you can see it's still in that weekly sell. It's going to have to do some work to get that copper, which has been in a buy for 4 days now. But they need to get that thing going in the right direction. Basically, that's what we're going to need, and that is get that into the weekly buy. And then see the copper start to balance out. How much more it can go, I don't know, because I don't believe the stimulus that they're doing, $120 billion, is just not, it just isn't enough for the size of the economy itself. 120 billion can do some positive things. It can lift the stock market a little bit. We're seeing it there. They can't sell it short. They only can sell it long. So it really makes it tough. I don't even think they have a listed options market. If they did, puts are going to be buying. People are going to be buying puts all day long. So, and then I wonder if you're allowed to if you're long a put. I guess if you're long a call, can you short the stock? I don't. Well, they've stopped shorting. I'm sure they're going to let professionals make markets, or this thing is going to get really ugly. And that again is why we try to always hope for free markets, free people, and free minds, and keep the government out of the game. All right, and last but not least, we shoot over to, did I say that? Let me go back to the copper. I want to save that. Okay, now from there, we are going to shoot over to platinum. Yes, there it is. And the platinum holding up, it's fighting, but look at the weekly. We're still in that weekly sell. There just doesn't seem any real conviction for the metals. It seems so odd, too. And when you think about our whole world economy and the way things are working at the moment, you would think there'd be even more buyers. But, we talk about options and, binaries and the exercise of them, taking delivery of them. And we find that when you have there's two styles of options. There's one called the American option. And that doesn't, that's not because it trades in America. It's because you can exercise it at any time. And then there's one that's called the European option. And that can only be exercised at its expiration date itself. So in other words, if it's a 4-month option, no matter what, you can't exercise it until it expires on its own. And so in Amsterdam, they used to trade both. They used to trade American options and European options. In the United States, mostly American options, But like the VIX trades as a European option, and I'm trying to think. There's another one that does that. Something that's very hard to deliver on. I think they're doing that to the gold and silver too. They make them a European option. And the end result is it doesn't always reflect the actions of the day or the week, even because they know that it could be like a cycle rhythm, and they're basically speculating, since they can't be exercised, that they don't have to worry about being short the premium, and as long as they have some type of hedge on, then they're just all fine there. It's a limited risk. All right, so that is pretty much the action we see in the metals market. And let's go now to the energy market. And there is crude oil this morning, trying to look firm. It's still in a buy, excuse me. And you can see it's still in a weekly buy too. And it doesn't seem to be getting any traction, which is kind of odd. We'll go over to, let's take a look at Brent. There it is right there. There's Brent. And Brent has that same flavor to it. Let's show you right there on the beta. And you can see it's been in a daily buy, like the West Texas Intermediate. And you can see the weekly's been in a buy for 4 weeks. It's showing a lot of strength there. And then we go over and we look at the same up on J4X. There's Brent. And you can see it's been trying to climb, and it's been climbing. It's doing a pretty good job. And it seems to be stalled out in the 79 area. And maybe it's going to go play with the 80. We've seen it climb to 85. But overall, there isn't much real conviction for all the noise that's going on in the oil production. And Mr. Trump promised last night, he promised, who did he do? He promised, I'm trying to think what he promised. He promised the people in New Hampshire that energy prices will be down 50% after his first year. And you can see here the stock market's taken off again. And that's the S&P 500. They got up to almost 24. They're trading at 22. Robin was saying that yesterday, that the hourly was breaking out, and it broke out. So let's go back to right there. And let's take a look at natural gas. There's natural gas. That's the March contract. Trading. It started to lift yesterday, but not enough yet. The front month did, though. I think we can put that in there. I think this is. Let me just double check on the exchange floor itself. What is the front month, or is it gone now? Let's see, natural gas. February yesterday was the front month, and it still is today, and it's trading at 52. At 2052, and so you can see it right. Natural gas, NG, right there. And you see it's trying to, it's in a weekly buy, daily buy. Showing the front month is definitely lifting. It's been going down, but it's been in a buy. Let's put it that way. There it is right there. Same thing, 249 out of 250. This is the front month. I don't exactly understand how they do these delivery things, solely because it's in pipelines. I think it's more related to liquefied gas. But it's all right. We enjoy as it is. Let it be as it is. Let's see. Be as it is. There we are. And that's the way the markets usually work too. If you leave them alone and you let them work, the markets will be more stable and more consistent. And so when interfering with the markets, by government action, it usually makes things look confusing and confusing. And so in this case here, the front month, and this is the Henry Hub, in other words, it's natural gas. More than likely, the contract represents that. Because I don't understand, when you have natural gas running down a pipeline, I don't understand how... I'll ring after. I don't understand how the Henry Hub would, like delivery. How do you take delivery? They must have private... There must be controlling pipelines to the point where you're allowed to access them for a fee, and more than just putting them in the pipe and thinking it all runs around the world, around the United States for free. There must be ownership and control. It's probably not a utility as much on some level as we think it is. See, I think of it as a utility since they are utilities. But there must be a point where they're not utilities. So how does a front month have such a difference than the next month? And the only answer to that is obviously some type of delivery situation. And that's what we're saying here. So anyhow, that is the energy sector, except for we'll take a look at the Spanish energy company that gives us some really decent insight into the actions of the marketplace itself. Now let's take a look at that. And we've got it fixed now too. I'm really happy we've got it fixed now on beta. And so you can see our math with it. And you can see here, I mean, this thing has been in a sell for a while, and then it had that big dip, which was very fascinating. It went from 27 all the way down to 25.25. And it's bouncing up close to the 26 area and rolling over. You can see the weekly's been in a sell for 5 full weeks. And let's put it up on J4X. Right there. There it is on J4X. So I'm always a little confused about the way it works in the United States. I have to read more to understand the Henry Hub situation and the delivery, but it must be accessing pipelines, and that's what the future contract must represent, because we know it's not like a barrel of oil. So in other words, it must be, and you would assume, the problem with oil, not problem, but one of the factors is that you take delivery of it, you got to put it somewhere, okay, and then you have a cost, insurance and so forth. So you can understand a back month being in demand more than a front month and vice versa. I can understand that physical delivery. But for natural gas, it must be accessing the pipelines. And that's why the February contract is trading about 30 cents, 40 cents over. Right now, let me just tell you what they are. The February contract is trading at $2.52, and the March contract is at $2.20. And what's really odd about it is April's at $2.22. So it's a little bit higher, actually, than the March. And then May is $2.31. And June is at $2.46. And July is at $2.61. So I don't even, I'm trying to comprehend where is it being stored or how is it being used. I know we burn it, of course, but it's an odd thing. I'm gonna have to read the delivery system. I've never read the delivery system for natural gas. Just like I said, it's a utility in the United States. A utility means that it's supposed to be for nonprofit, which means they can get around a lot of government things, government rules. And so that's the thing that has my mind kind of curious, since we follow now natural gas so much, especially since the Ukraine war. Before that, didn't really pay attention to it too much. But once the invasion of Ukraine, it had a whole different complexion. People really started paying attention to it differently. All right, so from there, that kind of completes the energy sector. Let's take a run around the stock market and see what they're up to. So there's the intraday again, trading at 4,922. You see the short term right here on this page. Oh, you can't see it. Let's get it up on there. Right there. Now let's do this. We'll go and take a look at, we'll look at it from here. There's the S&P 500. Let's widen it out a little bit at all-time highs. And you can see in the weekly buy forever and ever and ever. And the daily buy has been going on for 5 days. You can see over here on the NQs, or the Tech 100, the NASDAQ, all the tech companies running the planet, making the companies making business run better. That's the best way to describe what the tech companies do. And so you can see there, the same thing. It's been climbing, went from 16,500 to now we're at 17,682. So over 3 weeks, it's gone up 1,000 points. You can see here the Dow Jones Industrial Average at another all-time high also. Right there. And as you can see that, it's trading at 38,235. Coming no more than a month ago. Not the month, because at the end of December, we were at all-time highs. And in November, we've moved a couple thousand points over 2 months. And you can see it's trying to roll over. The algorithm's trying to show some weakness here. Let's see what the S&Ps are doing. Are they doing that same thing? Yeah, they're starting to curve, aren't they? They're starting to curve over. Still in the weeklies, though. Both are very strong in the weeklies. Same thing with Tech 100. You see that right there. It's trying to roll over also, but this weekly looks very strong. Interestingly, the weekly is not really caring that much whatsoever about the action in it. Now. Let's see. Let's jump over to our weakest index, which had a massive 2% run 2 days ago, then fell back yesterday, and now I'm sure it's lifting back up again right there. And that is the Russell 2000, and it's gaining right back. So that has had a fantastic move over just the last 6 days. I mean, it's come from 1900 to 2000. That's a 5% move right there, and now it's climbing again. So that's been really great. This one's basically represents companies with $5 billion and less that are in it. Something like 55-60% of the companies are not making money, but they are viable businesses, I guess, on some level or another. And out of the 2,000, somebody is an Apple or a Microsoft. Problem is you have to buy all 2,000 of them to find out which one is which. And you can see here, it's still in the weekly sell. And you can see the fast is trying to lift up. All right, now from there, we go over to the beta, and we check that out. We'll go take a look around the world. And right there, we start off, since we did the U.S. stocks, we go to the DAX. And there's the DAX, and it's lifting up today, trying to go for something like about the 2-month high. And you can see the weekly is still flirting with weekly, but I'm sure it's higher up now. That's a day behind. Oh, no, I'm sorry, that's the daily. So the daily is flirting with the sell. And the weekly has not turned into the buy. That's the oddest part of it all, is that the mathematics is that smart. Now, I'm waiting to see, because, we can see here, it's joining in with the U.S. market and trying to go after this high right here, whereas all of our U.S. indices have gone after that high. All right, and not there. We want to go to the CAC 40. And there's the CAC 40. And it's in a sell too. It's up today, but it's not taking out these highs over in here. Let's see. And the weekly is the same way. It's in a sell. Now, I'd imagine the FTSE might have a little bit more life in it. You can see a couple days in the buy. It's the second day. Still not taking out these highs. And it's still in a weekly sell. So we're not getting the strength that we are looking for, really. In the end result, it's just not there. All right. This is Doc. If there's no questions, we're going to get out of here. And so I'll wait a few more seconds and see if we got some questions. If not, we're going to go. Go. And we have to come up with a title today. And I think the title is very clear. U.S. stocks indexes outperform. That's exactly what it is. Out of all the things we've talked about today, I think that's the best way to describe it. U.S. indexes outperform world. I think that's the best way to describe it. Let's see right there. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Catch you tomorrow. It will be Thursday. Ta-ta for now.